Hello guys, welcome to my channel. The Lazy is more. So today we will discuss an editorial from Indian Express, and let's start the editorial directly. The title of the editorial is Higher for Longer. In the recent meetings, central banks across much of the developed world have chosen to keep interest rates unchanged. Last week, the European central banks chose to hold rates steady after 10 consecutive rate hikes. On Wednesday, the US Federal Reserve voted to maintain the status quo, and on Thursday, the Bank of England chose to keep interest rates unchanged. While the underlying dynamics of these economies do vary, the commentary from these central banks does seem to affirm the widely held view that interest rates are likely to remain higher for longer, as inflation is expected to remain above target for some time. In the US, the economic momentum has been quite strong. In the third quarter, GDP grew at a seasonally adjusted 4.9% annualized rate, surpassing expectation. The labor market remains tight. Non-farm payrolls in September were above expectation, and consumer spending has been healthy. While inflation has fallen, it remains well above the Fed's target of 2%. Core inflation, which excludes the volatile food and fuel components, is at 3.7% on an annual basis. In comparison, the Bank of England is rather than pessimistic about the prospects of the UK economy. The central bank now expected growth to be flat in the third quarter, which is weaker than what it had previously projected. For the fourth quarter, it projects a growth of only 0.1%. Over the medium term, growth is expected to remain well below historical averages. Inflation also appears to be more entrenched. In September, it stood at 6.7%. The bank expects it to fall to 4.5% in the first quarter of 2024, and then to 3.1% in the last quarter of 2024. Inflation is expected to be around the target only by the end of 2025. The situation is similar in the Eurozone. The ECB has projected inflation at 5.6% this year, declining thereafter to 3.2% by next year. Inflation is expected to trend towards 2% target by 2025. The central bank also expects growth in Eurozone to subdued at 0.7% this year, rising marginally thereafter to 1% in 24. Tighter monetary policy in these economies will have consequences for emerging markets like India. It will impact capital flows, currency and exports. During this period of considerable economic and geopolitical uncertainty, policymakers in India must be guided by the objective of ensuring macroeconomic stability. Okay, so this was for today, guys. Let's find out the 5 new words that I find appropriate for myself. European Central Bank. Rates remain unchanged. The third is status quo. Fourth is non-farm payrolls. Core inflation excludes food and fuel. Okay, so these are the 5 words that I would like to use in my daily conversation as well as writings. Okay, so till then, bye bye, signing off for the day. I also recommend you to comment in the comment section the 5 new words that you find appropriate for yourself to use in your daily conversation as well as writing. Okay, so till then, bye bye, signing off for the day.